You're like, oh, well, I pay $2,000 in rent. I can get a $3,000 mortgage too. Okay. Can you really live in Charlotte if you make $75,000 a year? Can you really live in Charlotte if you make $120,000 a year? 2023 home buyer report shows that 81% of millennial first-time home buyers have home buyers regret. There's nothing that is shocking about that. 8 out of 10 millennials are saying that, it became a nightmare to them. But the number one complaint, the interest rate. When you look at a mortgage rate on a $300,000 house at a 3 or 4% interest rate, then to a 6 or 7% interest rate, you're looking at double the payment. The second biggest complaint from millennial home buyers is they say that they don't know enough about home buying. I will share with you some of the reasons that I think that people aren't really, in a position to be happy about their purchase and they're having regrets. And I made a couple of notes here, just some of the big things that I always hear. They're buying at the top of their budget. Lastly, the anticipated cost. I'm telling you, whenever I talk to people, I say all types of things to make sure that they are very clear about what it is that they're about to get themselves into. If somebody is telling me I'm buying the house because it's cheaper to rent, we have to have a very serious conversation. Now, the big thing that I thought was very interesting is that 90% of the home buyers did not realize how expensive it would be to own the home. My very first question to anyone that wants to apply for a loan, I always start out with, why do you want to buy a house? Probably 7 out of 10 times, people will say, well, I'm throwing my money away in rent, followed up by, oh, well, it's just cheaper to buy than to rent, which is an absolute fallacy. In the long term, maybe because you're not subjected to your rent increasing. But if you're talking about exchanging dollar for dollar, if, like I said, your rent is $1,250 and you think you're getting ready to go and get you a 4-bedroom house for $1,250 because that is considered cheaper, you are sadly mistaken. One, that payment is not going to happen with rates where they are currently, unless you are putting down a significant down payment. But two, there are other things that you got to factor in that, again, when I look at these credit reports and somebody wants to apply for a $300,000 loan, they're like, oh, I can pay $2,000 a month in rent. They make $4,000. We have a problem because there's no room for anything else. Because when we calculate your debt ratio, it's based off of your gross monthly income. So, being that I have gone through this and I understand some of the unexpected costs, let me show you or tell you a few of these that are on here. One, property taxes. This is a big payment shock factor when people purchase new construction. People don't think about the fact that sometimes a lender may, depending on where you go, approve you with the property taxes just on the land. And then that following year, when they put the whole property taxes on the entire property, it goes up a couple $100 a month, and everybody might not be able to withstand a couple $100 difference. The other thing is, renovations. Oh, I want a fixer upper. A fixer upper costs a lot of money. Renovations cost a lot of money. Repairs cost a lot of money. So you have to be prepared in knowing, well, how much money do you really seriously have? Do you have a kid that you have to pay for daycare? Do you have a child in football? What are the factors that are going into you having to make renovations, and how much money do you have to actually be going towards those renovations that you're hoping for? Another reason, utilities. You get water bill. I don't even want to talk to you about how much my water bill is in the summertime, because I have to have my sprinkler system going because my grass is a mess. It's all types of expenses. There's roof work that may need to be done if you get an older house. Maintaining the home's appearance. I can tell you my shutters on my house is 5 years old, is weather beaten. I need to get them painted. I have to get my house pressure washed. Do you want to put up decorations, at Christmas time? Do you want to have Halloween decorations? That is maintaining the home's appearance. Especially if you live in an HOA community, you might want a fence, or you might need a fence because you have a dog or a small child. People don't factor in the fact that, A fence can cost you $7, $8, $9,000. It is expensive to own a house. And these are things, like I said, that people just do not consider. The other thing is the homeowner's insurance, the appliance repairs, upgrading your appliances. You might not like the package that you got with your builder. You might not like the fact that you have a 10-year-old refrigerator. It could go out at any given time and you have to go and spend, $2,000 or $3,000 for another one. I was shocked to find out how much refrigerators were when I first purchased my home. HVAC, yard work, home cleaning, foundation repairs, HOA fees. Aside from mortgages, homeowners say they pay an extra $17,459 in annual expenses. It can cost you significantly more than you initially thought that it would cost you. A lot of people want to move to Charlotte. It was just a lot of different factors that has, really exploded the growth of Charlotte and the surrounding areas. So I was able to pull up some numbers. According to Canopy, which is the Realtor Association, so they track all of the data for all of the sales that happen in Mecklenburg County and some surrounding counties, some of the popular counties that people like to go and move to. They compare data month to month and year to year. If you would like to move to Charlotte, let's quickly unpack what that might look like. How much money do you need to make? Like, can you move to Charlotte if you make $45,000 a year? Can you really live in Charlotte if you make $75,000 a year? Can you really live in Charlotte if you make $120,000 a year? But we're going to talk about just the average real quick. So on average, the average sales price in February 2023 for the entire region that I told you was $421,867. I can tell you now, with just some really just rough math, that you're going to be talking about a mortgage payment over, $3,000 a month when you factor in the principal, interest, property taxes, homeowners insurance, and mortgage insurance. If you're only going to be putting down 3% or only going to be putting down 5%. So let's say you live in Charlotte or surrounding areas and you purchase your home. You're in your home. Okay. We approved you for this loan. Now, how much money do you need to make to have a payment like this? If the payment is $3,200 a month, I'm going to say at just a bare minimum, you want to take that and you're going to double it. $6,400 a month, which is about $76,000 a year. That's just for you to get into the house in today's market. Now, that can be divided up amongst multiple people, one person, whatever it is, but that's roughly where the bare starting point is going to be. But guess what? Usually, people are not just coming into the situation with absolutely no bills at all. Usually, when we get into this situation, we're looking to purchase a home with 32, 33 years old, 34 years old, because that is the average age that a first-time home buyer is when they enter the market. You're like, oh, well, I pay $2,000 in rent. I can get a $3,000 mortgage too. Okay, maybe. I don't know. Let's find out. Let's just, for the sake of conversation, let's say you owe $40,000 in student loans. If you're not currently making a student loan payment, we're going to take 0.5% of that to determine whether or not, what your payment is going to be. So that's $200. Let's assume that you have a car payment as well. Well, recently we learned that a car payment average is about $700. I think it was like $715 or something like that. So we're going to add a $700 car payment in here too. What else might we have? Maybe credit cards. So let's say we have $200 a month in credit card debt. Okay, these are all of the numbers that we have to factor in whenever we're going to qualify you for a home. So let's go ahead and add it up and see how much money do you need to make to have this life with your $700 card payment, your $200 student loans, and your $200 credit card debt. Because I'm telling you, everybody comes in with some type of debt most often than not. Okay, so that's going to be $4,300 a month in debt. Times it by 2. How much money does somebody need to earn just to get into the house? $8,600 a month. How much money is that? $103,200 per year. So let's keep going. $3,200 for your payment, $200 for your student loans, $700 for your car payment, $200 for your credit cards. Let's see, what else do we need to live? Lights, gas bill, cell phone bill, cable bill. Let's just go ahead and say that every month your regular household bills, as because you own a house now, let's say that your average household bills are $600. Let's say $600 a month. We haven't eaten yet. We need to eat. It costs quite a bit to have your monthly grocery bill. Or if you want to eat out, we have some really nice restaurants in Charlotte. You might want to go out with your homegirls, $150 a weekend. I mean, you could let the boys pick up the drinks, but you know what I'm saying, girl. You feel me? But, let's say you go out every weekend, or every other weekend. You want to have a budget for that. Let's budget in fun. How much is fun? How much is fun? Because I be seeing y'all at Dubai. How much do it cost to go to Dubai? How much does it cost to go to Dubai? How much does it cost to go on a cruise? How much does it cost to go to Africa? How much does it cost? Because I be seeing y'all on the Instagram all the time. So let's just say just basic fun. You're not going anywhere. You're going to a restaurant once a month. Let's say we spend $500 a month on fun. Okay. Oh, I forgot. We got to gas up the car too. That's another $400 a month, right? $400 a month for that. We haven't eaten like at home yet. So let's throw in another, I don't know how much, another what? $600 for groceries. Okay, so now we have food, gas, fun, in the house bills. We got student loans, car payments, everything just to live in Charlotte. Okay, so we got 3,200, 200, 700, 200 in credit cards. We have $600 in bills. We got $500 for fun, because sometimes we're going to go to the fun before we go to the bills. You know what I'm saying? All right. So for fun, and another $400 a month for your gas to put in the car so you can get around from point A to point B, and another $600 a month so you can have groceries. I haven't factored in your daycare bill for your baby or your after school bill. We are assuming that you don't have any children that require any additional child care. We total all of that up for somebody to live in Charlotte and do all of those things. That's $6,400 a month in bills. If you are going to really, truly live, going to the restaurants, going to the theater, going to partake in the art, going to, just all of the different shows, this is like $6,400 a month. As a homeowner now, you're not renting. I did not factor in any of those miscellaneous costs that I talked about a little bit earlier. This is bare bones, just I'm living my life. So if you go into your situation understanding, oh God, like if I'm buying a $21,000 house, if I'm going to get myself into a situation where my mortgage is over $3,000 a month, I need to factor in everything, my real life. Earlier, I said it. When I talk to people, they buy at the top of their budget and they assume, oh, well, I mean, I'll be fine. Oh, well, I already paid $3,000 in rent. I already paid $2,000 in rent. They're not factoring in everything. Nowhere remotely close to everything. $6,400 a month in bills. Now, it might be you. It might be you and your boo or your bae or whoever. I don't know. But to really, truly live your life, I'm going to multiply this times 2. $6,400 times 2. Because we want to be comfortable. That's $12,800 a month.